Welcome to the Bill Walton Show, featuring conversations with leaders, entrepreneurs, artists, and thinkers. Fresh perspectives on money, culture, politics, and human flourishing. Interesting people, interesting things.
Welcome to the Bill Walton Show. I'm Bill Walton. For almost a century, the left, as we know, has been waging a methodical and largely successful war on American institutions, our universities, K-12 schools, the news media, Hollywood, our federal government bureaucracies, to name just a few. But during most of this time, business, even American big business, has remained the last bastion for those of us who believe in free people, free markets, and private property. But now even this is changing. Over the past couple of decades, and what the left likes to call their long march, this last remaining non-leftist institution has been besieged. The battle's not over, but it does hang in the balance. To learn how this came about and where it's going, I've asked Stephen Silcup, author of The Dictator of Woke Capital, How Political Correctness Captured Big Business, to join. He's senior commentator and publisher of the Political Forum, which provides research and consulting services to institutional investors. He knows the business well. He got his start with Prudential Securities in 1996 as a macroeconomic analysis and knows the ins and outs of the world capital markets. So Steve, I'm glad you're here. You've written a great book. It tells a great history of how we got here, but it also, I think, calls to mind exactly the thought that we've got to do something now. So frame the issue for me. Why is this the last bastion, and why do we need to draw the line in the sand here?
First, thanks very much for having me, Bill. I appreciate it. This is, as you said, this is the culmination of a century-long battle against the traditional institutions of Western civilization. Beginning in the 1920s, after World War I, after the Marxists were disappointed that the workers of the world did not unite, and the workers of the world, in fact, went to war for their respective nations, the Marxists decided that they needed to figure out why this happened, why their revolution did not occur. And what they decided was that they needed to break the traditional Western Christian cultural hegemony and to foster a new cultural understanding of man and his role in the world. And they've taken the institutions. Over the past 100 years, they've taken nearly all of the institutions, from education to media to entertainment to mainstream religion, have been taken over by the cultural left. And big business is the only institution that has so far managed to stand its ground, to hold its place against the cultural Marxists. And it's the only thing right now that stands between us and the precipice. Big business is the only bastion for conservative thought, for apolitical thought, and that's an important thing. Apolitical, as opposed to being deeply involved in political ideas, and it remains the only hope for salvaging our liberty.
So you tell great stories in your book. One of the story that's interesting is that in the 20s, when they figured the workers of the world were not going to unite, they decided that maybe the church was the problem and the other cultural institutions were the problem. And there was this it's usually some little guy who writes things that's the problem. In this case, we had a guy named Antonio Gramsci who founded the Italian Communist Party. And the line I like is that they locked him up, and one of the guys that locked him up said, "For 20 years, we must stop this brain from functioning."
Right. Yes.
Well, it didn't stop functioning. I guess he wrote some 3,000 pages of notes, and they smuggled the notes out, and those notes became the playbook for what we're now seeing in America which is the takeover of the cultural institutions. They decided not to deal with just economic, but go at culture. And they've been, as I point out in the opening, really successful. Now, you say big business is the last redoubt. I think, I hope that's still true, but it looks to me the way corporations are behaving right now. Take a look at Georgia. At first, they banned a piece of legislation in Georgia. I can't remember, was that an abortion bill that they were weighed in on, Walt Disney and
Yes.
and Coca-Cola, and then again with the Georgia voting really fair and free election laws into place. Then Major League Baseball joined the fray and decided to pull the All-Star game out of Georgia. How much of this territory have we already ceded?
Well, we've ceded far too much of it. When I say that big business is the last bastion, I mean theoretically. It hasn't been taken over completely. There's still some room for us to operate, to push those who would politicize capital out of American business. We are not completely shut out as we are in academia or in media, for example. So there is still some room to operate, but indeed, you're correct. We've ceded considerable ground. The cultural left has been waging this battle against business, specifically probably for the last 30 to 40 years. We who wish to keep politics out of business and keep business functioning for business purposes are way behind in recognizing what's happening, in organizing, and in taking action.
Well, I think this all started back when South Africa with apartheid was on everybody's screen, and it was on my screen. I mean, there was a successful battle to engage in economic sanctions against South Africa because what they were doing, what the government was doing, and a lot of us supported that, and that was a good thing, and all the corporations joined in. And so this notion of an activist corporation, I think, started out as a good thing. But now where we are is it's morphed into something called ESG, which is what, environmental, social governance, good governance, and it's got all the playbook of the left embedded in those three terms.
Yeah, well, you're correct. It did start what we understand as socially responsible investing or political activism in capital markets did in fact begin in earnest with the divestment from South Africa movement. It gained a little bit of steam in the 1970s and then really picked up steam in the 1980s and became a significant issue. And that morphed into an actual investment technique that was called social responsible investing, that was purely voluntary. It was bipartisan, and it was designed specifically to allow investors to sleep at night, knowing that their investments were aligned with their personal and political values.
Weren't those originally conservative movement where they called them sin stocks, and they didn't want to be in gambling or sex or other things like that? And so there are a lot of conservative funds that engaged in this.
Yeah, absolutely. That's, as I said, it was voluntary and it was bipartisan, which means that you could have the Little Sisters of the Poor wanting for their investments not to be aligned with companies that did business with birth control or abortion manufacturers, or it could be, as I said, various left-wing churches not wanting to be involved with South Africa or not wanting to be involved with armament manufacturers. It was bipartisan, and it was something that functioned perfectly well on a voluntary basis. The only cost to the investor was the upfront acknowledged possibility and likelihood, in fact, that they would take a hit on their return on investment. If they wanted to invest in these stocks that allowed that, that soothed their conscience, they had to be aware that they would probably take a hit, that they would return less than a portfolio that contained all of the companies would produce. But they did so voluntarily. And it was a system that functioned fairly well for probably 2 decades.
I want to frame this in a way that we can break into components we can understand. So on the one hand, we've got the issues within big business now where their community foundations and their marketing departments and their government people in Washington have all moved pretty hard left. And that's true for the biggest companies, certainly. Even the Business Roundtable, which is the 100 largest companies, has moved into something called stakeholder capitalism, away from shareholder capitalism. So you've got the companies themselves, which are moving left, but then you've also got the investor community with this ESG movement moving hard left, and it's embodied in Larry Fink and BlackRock. And BlackRock runs now what, $7 trillion, maybe $8 trillion, but who's counting? And they're using, he's a zealot. I mean, he believes firmly in this global warming, climate change, and the need for companies to toe the line with carbon emissions and things like that. Yet there is a little hypocrisy here, because Larry also just got approval to open the first wholly owned American mutual fund in guess which country? China.
In the People's Republic of China. Yep.
China.
Absolutely.
And if you look at the 25 top carbon emission cities in the world, I think China's got about 23 of them on it. I don't know who the other two that aren't Chinese, but so on the one hand, they're saying, gosh, companies, you got to toe the line with this carbon emissions. On the other hand, he's making a fortune in China.
Yeah, well, it gets even more interesting when you talk about BlackRock and China and carbon emissions. Yesterday was, I believe, the 27th anniversary of a piece that was written by Dr. Charles Jacobson, who runs the American Anti-Slavery Association, American Anti-Slavery Group, about the ongoing slave trade in North Africa. And it turns out that in the early 1990s, mid 1990s, and into the 2000s, one of the countries that was most responsible for trading Black slaves in Africa was Sudan. And the Republic of Sudan, or the leaders of Sudan, were able to do so, and were able to prosper, and were able to function because they were paid essentially by the People's Republic of China that was prospecting for oil in Sudan. And the company, the state-owned Chinese company, listed its public arm eventually as PetroChina. So PetroChina was essentially supporting and backing up the regime in Sudan that was conducting a slave trade. The largest single shareholder of PetroChina in the world is BlackRock. BlackRock owns, I believe, 6 or 7% of all outstanding shares of PetroChina on the Hong Kong exchange. And this, it's a company, it was at one point in time the largest petrochemicals company in the world, the largest company in the world, and continues to be a manufacturer of fossil fuels for the Chinese market, which, as you say, is a very dirty carbon producing market. And so Larry Fink is, the primary shareholder in this company that has all sorts of social governance and environmental issues going, dating back at least 25 years.
You're watching the Bill Walton show, and I'm here with Stephen Soukup, who's author of a great book on political correctness in big business. And we're talking about the fact that BlackRock, the very virtuous Larry Rock, indirectly owns a slave trading company in Sudan. Oh, by the way, we did a show on that. You can find it at thebillwaltonshow.com with Maureen, our guest was Phil Magnus. We did it last week. And if you tune into that, I think you can see what the truth was about the American slave institution. Very interesting. So let's come back to the here and now. So BlackRock is the largest institutional investor. About $5 billion or $5 trillion of that money is passive. But even though it's passive and they don't trade shares, they're still active as they're weighing in on proxies for companies and how they're governed. And when you look at their market share, the average Doesn't BlackRock own about 25% of all the major corporations listed on the New York Stock Exchange?
Well, if you take the big three passive asset management firms, which are BlackRock, which I believe today they just announced profits from last quarter and announced assets under management. I believe they're close to 10 trillion in total assets under management. If you take BlackRock, Vanguard, and State Street together, they have well over $20 trillion in assets under management, and they're all very aggressively pushing the idea that sustainability is the most important idea in investments.
That's important. So it's not just Larry Fink at BlackRock. He's not
Right.
over here. The CEOs of these other big money management firms are in lockstep with him.
Well, they are now. For decades, for years.
Lockstep may be a little exaggeration, but not by much.
Right. For years, these big three who control, as you say, together they control somewhere between 20 and 30% of every single S&P 500 company. Something like 19 out of the 20 biggest companies in the country, their primary stockholder, their first shareholder is either BlackRock, State Street, or Vanguard. And for years they said, there's no collusion between the three of us. We all have different investment goals. We all have different aims. We are all competing with one another. But that's changed over the last couple of years as all three of them have pledged fealty to this idea of sustainability, this idea that the most important characteristic of a company is how it is dealing with climate change, how it is prepared to deal with a zero carbon future, et cetera. And so they're making all of their decisions, all of their investment decisions, at least on paper, based on the idea of sustainability. And to clarify, that's not just their ESG funds, that's all of their investment funds. Fink's letter in 2020 and then 2021, his letter to shareholders and to CEOs was very explicit that he intends for all of his company's resources to be used to promote sustainability. So what we have now is a major block. As I said, somewhere between 20 and 30% of every single S&P 500 company voting for sustainability and therefore voting against board members, executives, and resolutions that would seek to promote business first and politics second.
Who is the small hedge fund that just got 3 directors elected to the Exxon board?
Right, that's engine number one, is a small hedge fund that is devoted very aggressively to environmentalism and to encouraging radical environmental practices in business. And they challenged Exxon at their annual shareholder meeting and put 3 candidates up for the board of directors. Historically, this would have been nothing but a blip. A small hedge fund with very little in assets under management would not have had an opportunity to do anything. But in this case, all 3 of the big 3 decided to get behind their push and voted for their candidates, engine number one's candidates for the Exxon board of directors. So they put 3 radical environmentalists on the Exxon board simply because they had the power to.
So Larry Fink and the other major money managers all voted yes for these 3 directors?
Yes.
And they knew that these 3 directors thought that Exxon ought to be in the wind and solar business instead of the oil business?
Yeah, absolutely.
So,
they knew that specifically.
My mind is boggling a little bit because I used to be chairman CEO of New York Stock Exchange Company myself back in the old days, and I thought I had the job of making money for my investors, and we did a pretty good job at that. But it was a fairly pure focus on doing the right thing, but also doing profitable things. Now, if I'm Larry Fink and I know I'm voting for directors who think that the business Exxon is in, they ought to get out of, isn't that completely violating his fiduciary responsibility to the people who trust him with their savings dollars?
Well, you would think that that would be an issue, but Fink in particular has done a very good job over the past 5 years or so of making the bogus argument that to invest in environmentalism, to invest in diversity, to invest in sustainability, to invest in all of these ESG principles will in fact produce long-term profits and long-term benefits for the corporations that are forced to do these things. So he's made the case that he thinks that this is long-term a profitable gamble. And he's convinced a lot of people of that. Money continues to pour into ESG funds at a ridiculous pace. It is without question the hottest investment sector in the world, particularly in Western Europe and the United States. And he has no qualms whatsoever about doing this. And most large institutional investors have no qualms about buying his spin on it.
Boy, the people who put their money to work that don't know what they're doing boggles. Let's break this down. ESG investing, energy, that's carbon footprints and greenhouse gas emissions. The S stands for social, which is human rights, equity, all the sort of things that are becoming problematic, probably critical race theories in there. The G is governance, which we just talked about, who's on the board of directors and what interests do they represent. The ESG portfolio, though, if you take a look at an index fund, which is where a lot of the money is now, that just an index of the companies that comprise the top 100 companies on the stock market or whatever basket of securities you want, and compare that to the ESG funds that are being sold to investors now. They're essentially the same portfolio because the FANG stocks, Facebook, Apple, Microsoft, Netflix, whatever, those are all considered ESG on the good side of ESG. They also happen to be the biggest companies by market cap. So if you're an index fund, you pay about 20 basis points to have your money managed. If you want to be virtuous, maybe less than that, maybe 0.7 basis points. If you want to be in an ESG fund, you might pay 25, 30 basis points. So you're paying roughly 4 times what you'd pay to be in the ESG fund to own the same portfolio.
Yeah, correct.
Have I missed anything? I mean, I've been getting more and more interested in this, and I'm trying to find out where's the beef in this, and there is no beef in ESG investing.
Well, that's one of the complaints with ESG portfolios is that they pretty well track a tech portfolio. In fact, there is considerable research that shows that most of the alpha, most of the gain produced by ESG investments is not related to ESG factors, but related to the fact that ESG companies thus far tend to be really good companies. As you said, Apple, Microsoft, Alphabet. They're good companies.
Good in the sense of highly profitable.
Yes, exactly. And so there are those out there who claim that ESG is a scam designed specifically to raise management fees, which the evidence would support that charge. As you said, you can buy an index fund with all of those same companies for a quarter of the management fee as you can buy an ESG fund. So yeah, in fact, there is a certain amount of deception going on here that has caused people to jump whole, with both feet into an investment trend that ends up costing them a considerable amount of money.
So we don't really know, though, what the long-term effect is of ESG investing, because this has gotten fashionable in the last 4 or 5 years, and since the ESG funds we've identified are the same as a tech fund, and tech stocks have done very well. What are they? 35% of the S&P 500 now. The returns are about the same, so ESG investing looks okay.
Right.
But what we don't know yet is if you really, let's take Exxon an example. Exxon makes a lot of money. They get 3 directors. The directors influence other people. They get people saying, well, we got to get out of fossil fuels. I mean, what's going to happen if you're a shareholder of Exxon and they decide to get out of fossil fuels to get into a business they don't really know?
Right. Well, that's the question. It in fact goes beyond simply what happens to the shareholders. ESG and stakeholder capitalism uh, profess that they're about more than just the shareholders, that they're worried and concerned about the rights of all of the potential stakeholders of a company, which includes the environment and its customers and things like that. And by forcing fossil fuel companies to abandon their core business, what we're doing essentially is setting up an energy crisis, whether it's 6 months, 12 months, 5 years down the road, where we're going to struggle to produce enough energy in order to heat and cool and provide electricity. We saw a little bit of how this works in Texas this past winter, where the state had invested very heavily in providing alternative fuel that failed.
I think wind and solar were about 25% of their energy supply.
Right. And so when you push companies to do things like that, to get out of their core business, to get into business lines that they're not as familiar with, you run the risk of creating a deficit of their original core business, which in the case of energy is clearly one of the most important commodities in the world.
So you're watching the Bill Walton Show. I'm talking with Steve Sulkup, who's the author of, what do we call it, the Woke Corporation, and how big business got captured by political correctness. And we're talking about Exxon and how Larry Fink and the other institutional investors managed to get 3 directors elected who really don't believe they should be in the oil and gas business. So stay tuned. This story is yet to be unwound. So we've identified the players, and you've got an excellent chapter in your book that talks about the various players. We've also got, in addition to the funds themselves, we've also got proxy advisors, and proxy
Right.
advisors, they're the ones when companies send out proxies saying, we want to elect a director, we want to issue more shares, we want to do this. People get to put things on the proxy, and the proxy advisors are supposed to tell investors whether to vote yay or nay. Describe that world a bit, because that's a little known world, but they've got a lot of power.
Right. For example, if you're managing an S&P 500 fund for institutional clients, you have a considerable amount of work to do come shareholder meeting season. Your responsibilities is to do due diligence on every single proposal, every single manager, every single board of directors for every single company that you hold. And that's asking an awful lot of people when you're talking about, say 500 companies. And so what these proxy advisory services do is they come in and say, look, we'll do all of that research. That is our job. We'll do all of the research, and then we'll tell you how to vote. And for obvious reasons, a great many wealth managers and asset managers alike believe that this is an invaluable service. They couldn't get by without it. They couldn't get by without somebody else doing the due diligence for them. The problem is that both of the companies that dominate this market, and that's ISS, Institutional Shareholder Services, and Glass Lewis, who together, I think, control about 97% of the shareholder of the proxy advisory service business. They're both very heavily leaning to the left. And what they advise shareholders and investment advisors to do is to vote for activist boards of directors, activist executives, and activist shareholder resolutions. So the overwhelming majority of advisors are getting advice to vote in favor of the politicization of capital.
So the stars are aligned. We've got State Street, BlackRock. Is Fidelity in this group as well? Or are they?
Fidelity is probably a smaller player in this as well. And
then we've got the 2 big proxy advisory firms. And aren't the overwhelming, like 99% of the activist proposals put on corporate proxies coming from the left?
Oh, absolutely. The left, if you look in the book, you'll see that the chapter on those who are active on the left, who are making politics in business part of their job, is in the neighborhood of 40 pages. The converse chapter on the people who are pushing back against this, people who want to get politics out of business, I believe is 8 or 9 pages. And that is reflected in the way that proxy resolutions are proposed and the way they're voted on as well. I think to date, the Free Enterprise Project, which is run by our friend Justin Danhoff, is the only active, full-time active shareholder service pushing back against the weaponization of capital for political purposes.
Yeah, I did.
And they can only do so much.
I did a show with Justin and Matt Schlapp a few weeks ago, and shameless plug here, you can find it at thebillwaltonshow.com. And for years, Justin labored on as maybe the sole activist on our side. And for people who want to know how they can make change, the proxy process, getting something on a proxy makes companies pay attention. And you don't have to own a lot of shares. What's the threshold now? It's about $2,000 worth of stock that gets you a seat at the table.
I'm not sure what they've done. The Trump administration proposed different rules for that just before the election, I believe, and I'm not sure where that stands.
But it's a small amount. Yeah. We don't have to get, but
not very much, right?
For a few hundred shares, you get a seat at the table. And people who are upset about Coca-Cola are upset with other publicly traded Delta, other publicly traded companies who are doing woke things. They can get into the business of putting items on their proxy, and then if you do that, they have to talk with you
yeah, absolutely. And Justin has had outsized influence, for being the one person who's been out there fighting this. He's done an awful lot of good, in large part because, as you say, companies prefer to keep this type, controversial things off of their proxy ballot. And so if a resolution comes in, and if the SEC says, yes, you have to have this on your ballot, the company would prefer to negotiate. They would prefer to do whatever they can to keep this out of the public eye, to keep it off their ballot. And so just one person, in this case, Justin, has been able to get quite a few concessions from large companies over the past several years, simply by being, a squeaky wheel. And I just want to clarify one thing. It takes $2,000 or so of a stock to propose a proxy resolution or a shareholder resolution, but it takes only one share to get you in the door to the shareholder meetings, to allow you to ask a question at a shareholder meeting, to put the CEO on the spot, and to vote a proxy. So you don't have to be heavily involved in investments. You don't have to be a major shareholder to do this. You just have to be in the game.
Well, I think a lot of us are really upset about the way major corporations are deciding that they're going to tell us, or they're going to try to steer things politically. They're trying to change what the Georgia legislature is doing, and that's happening all over the country. This is a way for activists to be engaged with these companies, and they have to pay attention to you. And that one share, if it gets you in the door, you get a chance to talk to a CEO. And now I happen to enjoy the process as a CEO running a shareholder meeting. I even had some short sellers, and that made things even more lively. But it's, most CEOs don't want to be engaged that way, and they don't want to take the heat publicly. So it's a big opportunity to have an outside voice, and some of these things are upsetting. Steve, where should we take this next? I mean, there's your book's amazing. I want to make sure I get the title right. I don't have it right here in front of me. Give me the name of your book. Give me a shameless plug, Steve.
It's The Dictatorship of Woke Capital.
Okay, dictatorship of woke capital, and we're identifying the dictators.
Yes.
We've got the overlords in the investment companies, and we've got the ones at the proxy advisory. Who are the other players on the scene attempting to dictate outcomes?
Well, there are a number of players within the C-suites at some of these companies. Um, Tim Cook at Apple is one of the most aggressive social justice warriors here at home in the United States. There's not an issue related to social justice that comes up that he doesn't get involved in and write an op-ed about and donate shareholder money to, and yet he's connected at the hip to the CCP, the Chinese Communist Party, because they allow him to run Apple's largest manufacturing hub, and Apple's second largest customer base is in the People's Republic of China. So he's very well connected with the CCP, and yet he continues to promote his social justice bona fides here at home. And he's one example. Jeff Bezos at Amazon is another example. Bob Iger, the former CEO of Disney, is another example of a very activist executive. We always like to say that pressure on businesses comes from three directions. It can come from the bottom up, which is employees who push their companies to get political. It can come from the top down, which is these CEOs, Bob Iger, Tim Cook, and the like. And then it can come from the outside in, which are the activist shareholders, Larry Fink, BlackRock, etc.
You're watching the Bill Walton Show. I'm here with Steve Sokop, and we're talking about some of our biggest corporations, Disney, BlackRock, and Apple, making common cause with the Chinese Communist Party. And what do we think about that? Steve just wrote a piece. I just love the title. What is wrong with these people? Steve, what's the gist of your story? You mentioned you name these names. I mean, talk about and you point out in this, and I know it's true. These are not stupid men. I mean, I would say, I just did a show on Charles Murray on IQ. I would say these guys are in the cognitive elite. Yet when it comes to moral judgments, I'm mystified as to how they divide up this world of what's good.
It really, in many ways, it's a mystery how they can internally rationalize their claim to be political liberals, claim to be in favor of social justice, and yet participate so unabashedly in the governance function of the People's Republic of China. When the people of Hong Kong were rebelling 2 years ago, before the mainland Chinese instituted their security law in Hong Kong, the people were revolting, and they were pushing for independence. And one of the apps that they were using to organize their protests was available on the Apple App Store. And the Chinese communists told Tim Cook that they did not want this app available anymore in Hong Kong, and Apple complied. They took the app off of their App Store. And it's amazing that they would do this, that they would even consider this, given what was at stake in Hong Kong, and given their claims to be activist liberals here in the United States. So it's amazing the type of hypocrisy that they engage in, and it's sort of baffling as to why they would do so. About the only explanation I can come up with is that they believe that they have a sense of how to rectify all of this in the end that nobody else does. I think I'm not sure if it's in that piece or not. They refer to themselves as, or they essentially are Gnostics. They are.
They're what?
They're Gnostics.
Gnostics. Okay.
Yes, they believe
they understand things in a way the rest of us don't.
Right. They believe they have the secret to attaining heaven on earth, and that if we'll all just shut up and follow them, that they'll, in the long run, they'll take care of everything for us.
So this is the same thing we're seeing with Jack Dorsey and Zuckerberg and the rest of the social media
Absolutely.
titans, that they all suffer from, I love the word Gnostic. They've got secret knowledge of the meaning of life that the rest of us do not. But somebody else had another word for that. I think Hayek called it the fatal conceit.
Yep.
I mean, I happen to think Larry Fink and the rest of the people who bought the climate change are flat wrong, and that there are many legitimate scientists can say, yeah, we may be warming a little bit, but the Earth is 10 times cooler than it was, 200,000 years ago. I don't know what the numbers are. There's all sorts of science. It's a little bit like the blackout on some of the science from coming out of the pandemic. We're not allowed to talk about this or that. There's a blackout on climate science. And I happen to believe, in knowing people that are in this business of studying it, they're wrong. And yet they've got the power and they're directing all these resources, and they could be running us right off a cliff.
Well, it's even worse than that. Even if you believe 100% what Larry Fink tells you about climate change, that we have to change the way we produce energy, that we have to do it now or the world's going to end. Even if you buy all of that 100%, research has shown, several studies have shown, that most of the innovations in alternative energy come from the large petrochemical companies, come from the large energy companies. They do not come from small startups. They do not come from little companies saying, we're going to change the world. They come from the companies that have the resources to invest in research. And so by changing those companies, by trying to divest from those companies, restricting funds to those companies, what we're doing is we're slitting our own throats. Even if you buy the climate change narrative 100%.
Well, and there's also the hidden costs of making that shift to wind and solar. I had Mark, who's our guy? Mark from Manhattan Institute. Oh goodness, he'll come right back. Anyway, so we've done it. It turns out that most of the wind and the solar equipment comes from China, and that the footprint of wind and solar is like 20 times the footprint of fossil fuels, and that the environmental costs of this, the wind turbine, or the turbine blades are not biodegradable. They don't go away forever, and so
right.
We're creating a massive environmental problem with the so-called clean energy, and yet we're not allowed to throw those costs in the equation, and almost nobody knows that.
Right.
I'm sorry. Thanks, Maureen. It's Mark Mills who's on the show. And another shameless plug, he's also at thebillwaltonshow.com, as we'll find Stephen Sokopson with this appearance. And we've covered about 20% of what we need to cover from your book. Stephen, what did one of the things I want to go back to is you did an extraordinary history of how we got to where we are. In this, you did it taking all the way back to the progressives in the late 19th century, and then took it through. We mentioned Gramsci and the cultural Marxism, but there's a strong strain of rule by experts in all of this, and those of us who believe in freedom are rankling under it. I mean, trace these threads just a minute before we close.
When I'm asked to define woke capital, I define woke capital as a top-down, anti-democratic movement on the part of some of the biggest and most important leaders in business to change the way American business functions and to change the relationship between the American citizen and the American state. And the key term, I think, in that is anti-democratic. As you say, I trace a lot of this back to the progressives and specifically to Johns Hopkins, where Richard Ely was a professor and Woodrow Wilson was one of his students. And the two of them devised the idea that in order for the American polity to survive, that we needed to have a governing class that could temper the ignorance and the selfishness of the masses, a class that was separate from the government, an administrative class that could not essentially be touched, that would be able to offer professional guidance and professional administration to the state in order to make sure that the important things got done and that the people didn't get in the way. And we see in wealth capital, we see in the ESG movement, we see in the stakeholder movement, the remnants of this original proposition. These are still people who believe that they have to take care of us because if we're allowed to take care of ourselves, that we won't do the right thing. And I think that's the most important thing to understand, is that this is intentionally anti-democratic. They wouldn't appreciate that term, but they do, they wouldn't deny that this is designed specifically to cut the people out of the process in order to get the important things done.
So I'd encourage everybody, and I will do. We'll have a cover on the show itself when we do this. Dictatorship of woke capital: how political correctness captured big business. There's much more in it than that, including the first part, which is a very succinct history of what Stephen was just talking about. Stephen, where can we find you and your work?
Well, right now you can find us at wealthcapital.org. This is going to be, when it's completely up and running, the web arm of our nonprofit arm, which is intended on sharing information about capital markets.
That'll be a 501c3, so we can support you.
Right now, we're a project of the American Principles Project Foundation, so we are donations can be made to them on our behalf, but we will hopefully within the next 6 months have our own 501c3 designation. Yes, but wealthcapital.org is where you can find us. Okay,
Stephen Soukup, thank you. This has been really interesting, and I want to get you back on. Maybe I can get you and Justin back on.
That would be great.
Tell some more stories about this fight we're in. Anyway, thanks for joining, and we'll see you next time. As I mentioned, you can find this show and all the other shows we've done on related topics on the BillWaltonShow.com and also all the other major podcast platforms, and most of them can still be found on YouTube. We've only had a couple pulled off. So anyway, thanks for joining, and we'll see you again soon. Stephen,
thank you, Bill.
Thank you. Great. Good. I hope you enjoyed the conversation. Want more? Click the subscribe button or head over to thebillwaltonshow.com to choose from over 100 episodes. You can also learn more about our guest on our Interesting People page. And send us your comments. We read every one, and your thoughts help us guide the show. If it's easier for you to listen, check out our podcast page and subscribe there. In return, we'll keep you informed about what's true, what's right, and what's next. Thanks for joining.